I'm very pleased to moderate this session, which is about scale, how to, carbon solutions at scale, and we are specifically talking about forest, natural climate solution and forest. Before I introduce you to the speaker, let me just give you two numbers about why scale is important. And first of all, we are talking about scaling the supply. Yesterday was a very interesting conversation about scale, but was mostly focusing on the demand side. Today we speak about supply, and we don't need to say if we scale demand, we need supply and vice versa. So the two have to move together. But first of all, why we need nature at scale. If I look at the numbers that have been published by CI in the exponential roadmap, we know that basically right now we have 12.5 gigaton of emissions from land, and what we need is to be at net zero by 2030, get to a 5 gigaton sink by 2040 and 10 gigaton sink by 2050. This is the only way that nature will help us get to net zero by 2050 in terms of climate mitigation. There is no discussion anymore that nature is part of the solution, has been recognized by IPCC and many others. So nature we have to contribute, nature has to contribute. Now, the other numbers that are really important is where do we stay with financing nature, right? And I'm just reading couple of the bullet points that were issued as part of the promotion of the UNEP report on financing nature. And it says climate, biodiversity, and degradation goals will be out of reach unless investments in nature-based solutions quickly ramp up to 384 billion per year by 2025. Today, we stand at 154 billion per year. So it's quite a significant ramp up we need. So that's the scaling we are talking about. And he says also that the private capital today only represents 17%. So how do we scale? Now, and I want to say, we are talking therefore about volumes, right? But we also need to make sure that we are talking about quality, because it's not just any tree that we want. We want a certain type of quality, because nature can only play this role if it's a high quality solution. So based on this, and you all have different roles in the value chain of the development of an NCS solution, I'd like to get you to introduce yourself, explain what role you cover in the value chain for the production of projects and programs, and give us an idea why scale is important from your perspective, and then I'll go into different, specific questions. But I'd like to start with you, Olivia, first.
Perfect. Well, thank you so much for having us today, and I'm delighted that we are having a conversation about the agreement that nature is absolutely part of the solution and must be part of the solution, and now the conversation has switched to how do we scale? We know that we want to be investing in nature. We know that it's absolutely part of the solution set. So now the question is, how do we actualize that? So this is really exciting from my perspective that we are at this position to talk about how we operationalize that vision as opposed to trying to align on that vision. The simple numbers that I think of that you were kind enough to kind of go through are the fact that we need to see nature sinks in the equation for a net zero future by the tune of 20 to 25%. That's going to be the solution set is going to include 20 to 25% coming from natural sinks. We're only seeing today capital flow through to the tune of about 3 to 4% of money is being funded into nature sinks and into nature-based carbon removal projects. So there's a huge gap. We also know that as companies and entities become more and more focused on their science-based targets, on their net zero goals and ambitions, that the role of carbon removals is going to become more and more important to their equations as well. So we know that the demand function is going to flow through. And what we see now is that there's an incredible shortfall in terms of bringing these assets to market, because we've seen underinvestment into the marketplace. So what we're really focused on at Aspiration is helping to bring forward that capital to flow it through into these projects in order to reach the scale that's one, necessary for the planet, and two, is going to meet the anticipated demand that we see in the market going forward. So that's really what our focus is on. From a company perspective, I think Zach did a great job earlier this morning as the head of investments, talking through kind of our project financing strategy and where we're seeing the opportunity to draw in private capital and to flow it through into these projects. But I like to think in terms of kind of simplistic messages here, which is we need to see more concrete demand from large buyers of these assets for financiers to understand the risks and opportunities associated with investing today in projects that deliver credits and revenue and cash flow back in 5 to 7 years. You have to have that. So that's why we're so focused on an ambitious plan that we've put together in the industry called the Nature Forward Coalition, where we are bringing together like-minded, large buyers of carbon assets to try to get to $1 billion of offtake this year, committed of $1 billion of offtake for the next 10 years of purchases or more, such that we have the locked-in demand at a fixed price, at a fixed volume, to then go back to financiers to get the financing to start these projects, and to not just think in terms of small projects and pilot projects and proof of concept, but scale, 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 bigger, bigger, bigger. And that is going to be so critical to get that natural flow through of capital into the projects that we need to meet the demands and the needs and requirements from the planet. So that's what we're really focused on. And I think it's really important for all of us to recognize what are the building blocks to get to scale, and having the demand function solved for is a critical piece of getting that capital to flow through in the way that we need to see it.
Thank you. Thank you, Olivia. Just a question. What is the price you have locked them in?
We can talk through the pricing, but it's effectively to take a look at where the forward price curves are today and essentially locking in that forward price curve. So there's an upward slope to the price curve, which makes good sense because of the supply-demand imbalance that we've just walked through. There's no way mechanically today for us or anyone to lock in those prices or to hedge into those prices because of the way that the market works. There's no forward price curves, and there's no interest rates or futures curves that you can buy into. So we're effectively giving corporations an opportunity to lock in today's forward price curve for the next 10 and 15 years.
Okay. So, Jack, over to you. Introduce the work you're doing and how this contributes to scale.
Thank you. Good afternoon, everyone. My name is Jacek, Siry. I'm a forest economist with the Center for Forest Business at the University of Georgia. My work in carbon space included the development of a forest carbon registry for the state of Georgia, which we are currently updating to include sustainable building products, including wood, or our focus is on wood. Thank you.
Vitalija, over to you.
Thanks, Giulia. So very nice to be here today. Thanks for the invitation. My name is Vitalija Lavreckyte. I represent a company called Abatable. I'm the head of origination of the company, and Abatable is a carbon startup. We are based on the other side of the Atlantic in London. And what we do, we look at carbon projects, and we essentially analyze them in order to be able to say what we believe is a high-quality carbon project, but also a reputable carbon project developer. So we look at it from, let's say, different perspectives, going through the different standards at first, methodologies, then the carbon projects themselves, and then project developers to really understand who is developing the high quality that we need in this market. So that's on the one side. And then this research informs a lot of the work that we do with the clients. So whether us supporting the investors that we work with, investors and asset managers, and essentially family offices, or corporates to whom we then sell on the credits, because we also focus on the downstream side of the business. So for us, really important is quality, to achieve that high-level quality, and in particular on MBS, but also other technologies, and support the corporates and buyers that are indeed, as we heard in this conference, it can be difficult to really decipher the market. The market is quite complex. So we want to be the party that actually does the hand-holding for them in case they're putting that finance down, whether that's pre-financing or offtakes. We want to be able to help them.
Thank you. And over to you, MaryKate.
Thanks so much. Hi, folks. I'm MaryKate Bullen. I'm the Director of Sustainability and ESG for Forest Investment Associates, FIA. FIA has been thrown around a couple times today from the U.S. Forest Service side. I'm not that side. We're private investors into sustainable forestry across the Americas. And we've been doing this for a long time, since 1986. I wasn't doing it quite in that year, but my colleagues were. And so what is our role in scaling NCS? Well, back in the 80s and 90s, what FIA and a couple of other peers in this industry were doing was creating timberland or forestry as an institutional asset class. And we're now at a moment where that group of companies, we're sometimes called TIMOs, not many people know what a TIMO is, it's a Timberland Investment Management Organization. I think we're in TIMO 2.0 now, where we're not establishing a new asset class, we're broadening the forestry asset class through carbon value, through biodiversity value, through more inclusive practices, and taking a more holistic approach to thinking about what it means to invest in, own, and manage land well for things beyond timber, and really getting a more holistic, complete, total return by actively managing multiple benefits and values. So what's the role that someone like FIA or our peers can do here in scaling NCS? It's because we have excellence in managing forests, identifying land, we know how to transact, we know how to deal with land tenure, landowners, get into good areas, we know how to grow markets that support land-based assets, and really, really importantly is a long-term asset management perspective. If you speak to any forester, they think about things really generationally. And when I talk to the guys who work on the ground for us up in Pennsylvania and here in New York, they're planting trees they will never see be mature. And that is incredibly important. We talk about permanence and lasting carbon removals and benefits, and that's what the forest industry brings, is long-term planning of real assets that have real carbon benefits and real biodiversity, wildlife, clean water benefits. So that's super important. The other thing that folks like us can bring is thinking about how do you set up and scale a platform in an area where there wasn't one before. We made timberland institutionalized in the US very successfully. It has spread through to South America with institutional ownership improving assets there, into Australia, New Zealand, now even into Africa and emerging markets and frontier markets in Southeast Asia. So that's something that investors who think about real assets and land as both an actual thing that you have to actively manage and as a business and a total return investment that you have to manage comes together. That's a really important thing. And I think you also asked about roadblocks. So what are some of the roadblocks to generating this supply? That is pretty complex, and it gets more complex the more types of benefits you try and manage, and the more risk you're taking on in entering new markets or areas where there's a lot of complexities. So we're now in this weird space where we don't just need finance people and foresters, we need social experts, and we need lawyers who understand very complex land tenure. We need people who can do an environmental and social impact assessment in 2 months so it's quick enough for us to assess is this a viable opportunity. These things are not easy. It's really complex. It's not even easy to write RFPs for all of the people that you need to work. So there's a little bit of like a talent challenge in bringing the right skill sets in. And just very quickly, the second roadblocks I'd mention are just practical. We need market infrastructure, basic things down to nurseries. There aren't many nurseries who can produce native seedlings very well and at scale. And you know what there's less of is technical knowledge about how to grow native species for timber markets and how to process those markets. So there's some very pragmatic parts of this that we also have to solve for so that we can make reforestation more profitable and scalable from seedling to mill at the end, and for seedlings that stay in the ground over the long term.
So let's not take this as a daunting list. I think what is really valuable is the fact that we know we have a list now of things that are necessary. So we are not, navigating this in the dark. I think there is a lot of experience. Also, Olivia, you were talking about the word pilot. We are past the pilot phase now. Let's take the learning from the pilots and scale. I'd like to ask you actually, Olivia, because in our prep conversation you were talking about another important, not so much a roadblock, but like a bottleneck to get to scale. And that is also links to the experts' expertise. So could you just elaborate a little bit more about that?
Yeah, from my perspective, share all the views that MaryKate had already offered in terms of some of the challenges, and I'm sure we could produce a nice whiteboard of laundry list of additional challenges, but one that continues to rise to the top for me and is one that I want all of us in the industry to think seriously about is the role of talent in registries. The registries are a really critical part of this entire ecosystem where all of this incredible hard work, money, expectations, community involvement, all gets channeled through one tiny little process with the registries. And they're just humans at these registries, and we really only have 4 of them, 4 registries, and only so many humans at each of these registries. And they hold the keys to unlocking the binary outcome of, is this a carbon credit or is this not a carbon credit? So a hugely important responsibility that they have. And what I'm concerned about is seeing incredible talent being poached away from the registries to go work in all of the different really important lanes of this ecosystem or parts of this ecosystem. But through that process of all of us finding incredible talent who knows the carbon market really well and bringing them into our organizations to help accelerate other parts of this ecosystem, we end up leaving the registries without a lot of talent. And I'm worried that as we flow through the scale that we're talking about, that becomes a really, really critical bottleneck. So I want us all to think, I don't have a solution, I want us all to think about how we can support through our industry work, the registries, how do we cycle through talent into the industries, how do we grow the industries, how do we grow the process where we understand what this kind of binary outcome for these carbon assets are. And then also just thinking about the Guardian article from earlier this year, the continued challenges with the quality standard for these assets on a backward-looking basis now and a forward-looking basis for these poor registries, and think about, again, how much work and how much critical work the registries have to do, and the amount of processing that they are going to have to go through in order to defend the positions of historical credits and to defend and produce innovation for forward-looking carbon credits. And the more that we can kind of band together and provide support, whether that's intellectual capacity, intellectual property, engagement, staffing, resources, I don't know the answer, but I think we're going to have to do more in terms of engagement there.
Thank you, Olivia. These are really, really wise words, and I think will be great to, to have follow-up conversations and start thinking as a sector, right? Because right now we keep talking markets, but the market is where the transaction happens, but you all together, you are a sector that it's different than just, let's say, well, like every sector, you have raw materials in different stages. And so, how do we operate as a sector to make sure that everything, flows from the raw material being, the land and the people to all the way to the actual product. And have a little bit more this kind of approach and thinking that if something fails during the system, the process fails and there will be no credits at the end, and therefore we are all in this together. What is your, this is a huge challenge, the expertise, and as you said, is expertise within the companies also, but expertise, as I said, at the sector level. Based on your experience, what would be the ways to somehow address, the expertise internally or these bottlenecks? What have you seen, the evolution of the market?
Yeah, for me, yeah?
Yeah.
Okay.
I'll go through.
That's a very complicated question. And I would add to that the certifying bodies and the verifiers who are increasingly under a microscope for what they're doing as well. But I totally echo Olivia's points on efficiency and quality and talent and process at the registry level. Yeah, as an industry, so I do come from this world of forest investment and a piece of the forest sector, and I think we really have evolved. 10 years ago, I think I was one of the very few people who had an ESG or sustainability role within our band of companies and peers. And now we have full teams at most of these teams. All of the marketing has picked up and realized that trees are about more than timber, and that people get interested in investing even for timber because they know those forests do more things. So we've seen a real marketing evolution. We're seeing some team and structuring evolution, and I think the next evolution is to really make sure that the products the investment products we're selling or creating for our clients truly reflect that underlying opportunity. And that does still require different skill sets, but also just kind of a different lens coming into some of these companies. So I'm reflecting a little bit on FIA, who I've only been with for 2 years, but the amount of progress and change in that company for over the past 10 years and the things I've seen personally in 2 years, really, really high. And part of our evolution now, where we have an ability to focus on nature-based solutions and not just intensively manage production forests in the world's largest timber market, the south of the US, we're really expanding that lens. And that takes the whole company saying, okay, how do we leverage what we know well and what we do very well to address these new societal and environmental challenges, and even more importantly, the challenges of our clients. So what we're trying to solve for is, what does an investor need in their portfolio that a forest or land-based investment can provide? And so we don't look at that as a single thing. We don't think NBS or forestry is one size fits all. There's not one product for all clients, and we want to meet a broader range of stakeholder needs to be able to get more capital into scaling these solutions. So I think about, just maybe take the climate lens. One way we think about engaging with clients is helping them to first understand what is a forest climate issue, what's happening in your existing portfolio if you have one. Then we go from understanding to managing. How would you like to manage for those outcomes? Is there something that matters to you in addition to a financial return? And the third level is being really strategic about optimizing. How can I very intentionally use forestry and land assets to solve a problem in my portfolio or to help me meet a target in that portfolio? And again, it's not one size fits all. We actually have a ton of investors who are not interested in carbon credits, including really progressive investors. And I'll tell you a case of one of our recent clients. There's some public information about this online. They have a climate-aligned mandate with us where their forestry investments are going to actively decarbonize their portfolio and help them meet a 2025 net zero target, 2030 net negative target. This is a pension product in Europe, and it's ahead of the overall organization's 2040 net zero. They don't want carbon credits. That's not going to do it for them. 2 reasons. One, their stakeholders in Europe are a little weary and they're not sure, and it's very complicated to talk to people about why carbon credits are useful and when and how and which types. It's complicated. Imagine trying to communicate that to millions of pensioners. Difficult. So that's one thing. The second is this. They have a financial obligation. They're regulated. And they think if a carbon credit comes into their portfolio, they have to monetize it. And if they do that, and if I sell it over here to Vitalija, for example, my portfolio no longer has the benefit of that emissions reduction or avoidance. It's gone. So they're back at zero. So to decarbonize, they don't want carbon credits. Then we've got tons of other conversations, a lot more of these. People call us up, go, okay, you do trees, how do I get carbon credits? And so again, these are all not one size fits all conversations. It's about the same way that in the 80s and 90s, we tried to develop a diversified portfolio with exposure to different timber markets and underlying product markets and different forest types. We now do that with climate as a consideration. And it's very few actual staffing additions or changes within an organization like us. It's just the openness to a new lens and having conversations that are very intentionally integrating different dimensions of forestry into the business.
You still have to get your staff to be prepared and knowledgeable about it.
Yeah, we have to be able to talk with fluency about these issues. We have to understand the code words, and we need to know who to call when we want an excellent project developer.
Yeah. Vitalija, you speak to clients all the time, so...
I speak to clients, I speak to project developers, but maybe just to pick up on a point that Olivia made earlier around the resource scarcity. And so I hired, in my past, I hired also quite a lot of people who just try to enter, the carbon market, and it's tough. And a lot of us who are here in this room, we've exchanged companies, we've worked for one company, then went to another, just because there's only so many of us who actually work within the carbon space, and there's only so much talent. And I think it is certainly a big roadblock, and we also have friends in places like in the registries, and there's a lot of, I think, willingness to contribute, just by being there, but it takes a long time to train new people, and I've done it. We've been trying to do it for sort of years now, trying to hire more junior talent to bring it to the carbon market, and sort of make like a career path and like make it a thing. And it sort of boils down to the fact that how we're seeing the carbon market as essentially being a reputable place, and bringing that trust that people want to enter the carbon market, seeing this as an opportunity for them, building that level of knowledge, and then sort of continuing to innovate and stay around here for many years to come. Certainly a challenge, but in terms of us, sitting here in this room and in this sort of with this audience, a lot of people believe in the carbon market, and I guess it's basically a collective effort from each and every one of us to grab someone else's hand and say, come work with me, come work within the carbon space because there's so much potential and we want to do that. There's so much talent. And I was just recruiting the other day and got 70 different applications and maybe 3 people had a carbon background. But let's bring some of them in. Let's bring people who haven't had the background and actually train them up. Build from the ground up and actually just multiply the effort and then actually also help to scale the market just because then we'll have that level of resource, hopefully, and grow it all together. That's hopefully not very helpful, but
no, it is
long-term
and
strategy.
I think, we are touching something very concrete and very real. I mean, we need talent. So how do we recruit more talent? And I think there are a lot of ways also to, as you said, start from the ground up, get people excited about it, because I really think this is the great thing about this sector is that it's exciting. We all think we can see that we can make a difference. So, great ideas to follow up. Definitely important to put some, accent on what is missing. Jack, if you want to also reflect on what universities could do, that would be great, but also specifically on methodologies. We were going to talk to you about methodology changes.
Okay. So very quickly on talent, we actually, I wouldn't call produce, but we educated young professionals with a degree that we call Master of Forest Resources in Forest Business Management, and they will be very well suited to all of the challenges discussed here. So
I can vouch for some of them.
And we'll probably put you in touch with those who are still looking for a job. Now, the question was about the methodologies for estimating.
Yes, and how also through the methodology we can scale more, because the question is, we are talking about forest.
Okay.
What kind of, interventions are we talking about?
Okay. So I think at the very bottom level, we know how to measure wood and wood products. So by and large, we know how to measure carbon because they are closely related. We can also measure other resource conditions mentioned here, biodiversity, and other considerations. Typically, you are dealing with 3 approaches. 2 of those were mentioned earlier today: ground measurement, remote sensing, and also natural resource models, which help us understand how resources evolve over time. All of these approaches will yield some type of estimate with a certain level of accuracy. These are not exact measurements, but I think we have applied those for a long time and we understand quite well how they work. I think this information, resource information that we produce is good enough for billions of dollars in land and timber transactions every year, so I would surmise it should be good enough for trading carbon. Oftentimes, I think, we also hear calls for more transparency, and these calls sometimes are interpreted as more information or more data more frequently, and sometimes it can go to the next level, which is all the data all the time. I don't think that is necessarily the best approach. I think it may not be possible. It may not be practical. It certainly is going to be expensive. What we need is certain information at certain times delivered with a certain level of accuracy. That's all it is, and that certainly doesn't include all of the information. Further, dealing with a certain degree of uncertainty in our estimates, there are a variety of approaches that can be implemented and are being implemented in carbon trade. Obviously, I'm sure that most of us already are familiar with escrow accounts, which are associated with a lot of carbon projects. We can also, as a matter when we are estimating resource conditions, we can actually develop very conservative statistical estimates. We further can deploy or employ various financial insurance products that will help us to deal with this problem. So I think all in all, we should be in a pretty good shape in that regard.
In terms of methodology, okay. And so a question for both, MaryKate and Olivia and Vitalija. What is your view in terms of the diversity of type of interventions? Olivia, you were talking very strongly about the importance of investing in restoration for the, carbon sequestration potential. But is that the only way to get carbon, associated to forest? What are your views in terms also from a buyer perspective of a portfolio approach? Maybe I'll start with MaryKate next.
Sure. All right, I bet a lot of us know this phrase of protect, manage, restore. Yes, sounds familiar since about 2017. I want to propose one more word, use. Protect, manage, restore, use. The world needs food, fuel, and fiber for a growing population with rising consumption and production. That's all got to come from a finite land base. So that means that we have an obligation to manage production lands as well as possible without risking other ecosystem services. We need to take land back into restoration, but also land that's so degraded it can't be restored to a strong condition, potentially into production, and we need to protect remaining sensitive ecosystems and forests. We know all of that, but we also have to increase the use of sustainable and renewable fibers. There's a 37% demand increase to 2050 for wood, and that's not including if the use of mass timbers accelerates. That's huge. We need at least $16 billion per year in additional investment into reforestation and forest management to meet the UN's predictions to triple investment in forests and land to 2030 and quadruple that to 2050. That's a big task, and those numbers are based on delivering climate and nature targets for land. That's huge, so we do have to scale this a lot. And I'm gonna read you one quick quote, and it's a little pop quiz. If anybody knows where this quote comes from, let me know. In the long term, a sustainable forest management strategy aimed at maintaining or increasing forest carbon stocks while producing an annual sustained yield of timber, fiber, or energy from the forest will generate the largest sustained mitigation benefit. Ooh, Jen, in the back. Gold star, I should have had a prize, IPCC Special Report on Climate Change and Land. I'm not surprised you knew that. Thank you. I mean, that's huge. The thing is, a lot of people we talk to have no idea. People still think cutting down a tree is bad. We ain't cutting down the ancient redwoods. We're not touching old growth. We are managing forests responsibly, reforesting where we can. And to make this scalable, I'll hand it over to Olivia in just a quick sec. But it's about getting attractive risk-adjusted returns across a range of types of projects and a range of levels of impact. Scalable climate solutions need an all-of-the-above approach as long as we have guardrails. If we do no harm to the environment or society, we need to scale all the good types of land use. It's not just, I'm gonna protect this tree that has a koala in it and I'm gonna, teach the koala to I don't know. Sorry, I used to work in Australia. Koalas were a very sensitive issue for the forest industry. It's not the warmest, fuzziest, most socially integrated biodiverse credits that are the only solution. Those are excellent and super duper necessary, but so is just getting more trees in the ground in the right places with the right management strategies. So my request would be, don't bash any good climate solution when you're trying to promote your good climate solution. Make sure that all the good climate solutions are uplifted together.
Well, that was awesome. I did not win the IPCC report quiz there. Yeah, I mean, from my perspective, I guess I would take it one dimension further, and maybe this isn't the right stage necessarily to do this, but the level of innovation for climate solutions, we just need to keep leaning in. Not all buyers of carbon credits and users of carbon assets need to lean in, but those who can, with risk tolerance and balance sheets and the flexibility to do so, will help us all in the industry. What does that mean? It means there are a certain number of project types with verified methodologies that'll go through registries, and those are great, and you'll get carbon credits at the end of it. But for other climate solutions that don't yet have methodologies baked in and prepared through good work of Jacek and others, we need to still be investing in those. It's not for all buyers. It's not for a perfect symmetry with assets and liabilities that you're going to show to the SEC in terms of your climate neutral goals or in your 10K reporting. But there's still important investments that someone needs to lean into to help accelerate all of the important work that has to get done through that ecosystem with validation, verification, methodologies, scientific work in coordination with academia. There's a whole host of things that have to happen in order for us to get to this innovation phase with new types of carbon credits. But I think that's the wave of the future, at least in my mind, is that we're gonna see more types of validated methodologies and carbon credit types out there, that we need those who can to lean in now in order to create the infrastructure that will allow us to have blue carbon and to have, seaweed and kelp-based validated carbon credits or peatlands and wetlands. There's just so many different parts of the natural systems that need reinvestment that don't yet have the methodologies and the verification standards and the bodies, but still are going to be important parts of the equation that we need to, where we can, lean in.
Thank you. Yes, Vitalija.
Yeah, no, really appreciate that comment and really was probably just going to build upon it. When I was thinking about sort of, preparing for this, I think in terms of the three roadblocks that I thought were mostly to do with financing. So on the one side, we are still missing a lot of finance actually that we need to put down for natural capital, and whether that's a carbon solution or not a carbon solution is just a natural capital that we need to work on. And there's also a report by Nicholas Stern and colleagues published fairly recently just indicating how much behind we are in terms of investing in that. So actually bringing on board institutional capital, different capital providers, whether they are sort of institutional or whether they're family offices or even streaming organizations that have actually come into play in the recent years, trying to to build new business models and finance projects is actually really crucial. So just the scale of the finance is really important, and whoever here is a financier and capital provider, there's a lot of entry points into the carbon market to actually start implementing projects that would otherwise really not happen. And so to build upon it, what you said earlier, Olivia, is that a lot of that capital also needs to go into the very early stage of project feasibility study financing. So pre-feasibility, feasibility, the work that we kind of have to take that risk and actually just come in and say, hey, we may lose this money. Maybe we lose this $100,000 or 200, but actually we would have tried. And so we went into this foreign country that we didn't necessarily know, and we've executed on a feasibility with the technical parties that we have here in this room as well, but actually financed this work as an R&D expense and said, hey, we want to do this, maybe we come up with a solution that then is scalable. And so having that finance is also very important. And then finally, on the back of that, the demand aspect. So if we're thinking as an investor, ideally we want to have the demand so that we know that our investment actually makes sense. So then the demand side, the corporate buyers, the buyers that have made commitments and also have net zero targets, SBTI targets more broadly, we need to have more of those to actually commit, and then investors will come in easier because they know that there's going to be off-takers. And for me, these are, I think, the major really three roadblocks that I'm seeing in the carbon market in my day-to-day work, really, because I talk to all of these three categories of people, and if we're able to essentially to harness this and to work with corporates and increase demand and collect that demand together, we're also going to be able to get more financing into these early stage project development. That's it.
Thank you. No, this is great. I mean, we are talking, you can see there is a lot of enthusiasm and excitement for people that are really dedicated to this. And I think the question there is, we need innovation, we need risk takers, we need to create opportunities, we need to have, the talent there. My understanding from what you're saying is that let's also be, consider that it doesn't necessarily have to be the voluntary carbon market. NCS for, let's say, scaling the nature contribution can come from investment from other sides. Jack, you wanted to comment on that? Or, what is your position in terms of, as a knowledge factory? Where do you think does it have to be the voluntary carbon market? Or, we talked about biodiversity market, the past two sessions. What we want is scaling the outcomes, right?
Yes, well, so it's challenging. There are some compliance markets that work reasonably well, and I think the example that I can use for today would be New Zealand forest carbon trading schemes, which include forestry and actually generate some fantastic values for forest managers at the present time. But whether to have a mandatory markets mandated by the government, that is a big question. So I am not sure, but it will solve one problem that I think we are experiencing in carbon markets these days. We have so many programs, we have so many standards. The market is extremely heterogeneous. It's really hard to walk from one standard or one product to another. And I think we need some standardization or a way to compare various carbon projects, or maybe one of the big players, some of whom may be actually in this room, figure out, okay, what creates a genuine scientifically confirmed environmental benefits, and how this can be converted into a carbon credit that also makes sense for investors in carbon markets. And I don't think we are there yet. And I think, Kyoto came about in 1992, and we have been trying this for 3 decades. And we still haven't arrived there. I think some standardization will be of a great assistance.
Well, let's see what ICVCM comes up with at the end of this month. We are all kind of looking at that, if the core carbon principles and the assessment framework will help provide the standardization and confidence. I'm not sure we have time for questions. One or two questions from the audience.
You can quiz us back, ask us tough questions.
Yes. One over there. Great song.
Yeah. Well, thanks. So Paulo Quadri from NCX. I just wanted to build on MaryKate's point on going beyond carbon and really making so people come around the idea that what we need probably is to use forest more and not less, right? But the way I see things right now is that there's no integrated methodology that allows us to work on landscapes based on how diverse they are, right? Like in time and space. And I see that as a challenge, that the rigidity of those methodologies are not allowing us to, credit for carbon at particular different times or from different spaces, and then move towards like a value chain, for example, where the harvest wood products play a very important role, and then construction companies can play a part there. And I wonder if there's, how do you see that moving forward, like in terms of developing the right methodologies that are more flexible and that can take, that can actually work at these different points in time and space?
I can answer that with a little bit of a US example. I think we're a ways away from a global solution to that, to be honest, but within the US side of forest investment and forest sector and wood and forest products, there's a pretty big effort right now to develop a standardized tool and to get all of the data from what we call like the mill or supply sheds that would help us have transparency of carbon impact back to the forest, to the mill, to consumers. And one of the biggest issues right now is there's a lot of conversations with architects who understand the benefits of building with wood that are health and well-being benefits, and that also know there's a climate impact benefit there, but we find that they don't believe they have the correct data. So we're actually, it's a farm bill year, yay, no policy nerds, okay, yes, okay, one person, good. And so we're actually, through several different channels, there's a push for USDA, the US Department of Agriculture, which looks over the US Forest Service and others, to basically take a tool that's already built for agriculture, build the equivalent for forestry, to help make this transparent and basically automated data system that will provide the assurance to buyers that want to build mass timber buildings instead of steel and concrete buildings, and so that they could get the numbers out of that. We're going to try really hard for that. It's a truly like impressive effort where you have a lot of competitors coming around being like, how do we just do more good? How do we show the good? It takes a lot of work, and I think it'll be interesting to see if that's something that we can scale. And I had a shout out yesterday about the greenhouse gas protocol, land sector and removals guidance. That's another critical piece. If we get that wrong, everyone that reports their GHG emissions in scope 1, 2, and 3 is not going to have an incentive to encourage more removals in their business and in their supply chains. And that would be a really big shame, a really, really, really big shame. So that's the global opportunity, I think.
Yeah, thank you. Okay.
Hi, I'm Jose from CO2Zero, and I was thinking about what Olivia was saying. Like, we have a bottleneck in the terms of registries. And so what about letting other programs, other registries come into the play? Like, there are different other programs applying also to ICROA, but that's another bottleneck. So why not to look more into the projects instead of the registries? So yeah, that's my question.
Yeah, I mean, it's an interesting question. What role can the projects and the project developers play in more of the kind of verification or the adjudication of the quality or the binary outcome? Is it or is it not a carbon credit? Definitely have seen several companies try to do that type of work in partnership with landowners, ranchers, others who might be able to generate carbon credits and provide their own data and their kind of own verification process. I think from my perspective, spending some time yesterday with folks who used to be over at the SEC, and from kind of a regulatory perspective and a policy perspective, my intuition, at least in the US, is that there's probably going to be a greater role for somebody like the CFTC, which is the Commodities and Futures Trading Commission here in the US, to step in to play a greater role for defining the standards of what is and isn't a credit, and probably at some point pulling some of those responsibilities from the registries. And so the direction arrow that I see playing out for the evolution in this market is that you're going to see a greater role played by regulators and policymakers, putting carbon assets under the same jurisdiction as any other commodities-based asset. And I think all else equal, that's probably going to be a good thing. That will allow the market to evolve to similar standards and expectations that you would see from trading any other commodity, whether that's timber or oil and gas or, you know, pigs and cows and other commodities that folks trade daily that fall under the jurisdiction of CFTC. But currently, carbon assets don't. They kind of fall outside of the purview of regulations effectively at this point. So it's kind of like its own asset class, but it's not quite there yet. It doesn't have the same infrastructure built around it. So yes, we have seen some companies and some organizations lean toward the projects doing more of their data collection and verification, but I ultimately think it's actually going to go in the opposite direction with greater regulatory oversight.
All right, thank you so much, Olivia. Lunch? Okay. So yeah, for the next questions, I'm sorry we have been instructed is lunch. But if you have questions, please, I think the speakers can stay here for 5 more minutes. So please come over here and ask directly your questions. So thank you very much, and over to lunch.